The last 2 weeks have rained a storm of unprecedented chaos on financial markets across the board, including Bitcoin markets. After many of the worst days in stock market history, governments around the world have deployed massive stimulus packages with even more on the way. While these actions are intended to slow the rate of economic downfall in the short term, the long-term implications of the downturn and the stimulus packages are yet unknown. The short-term effects of the stimulus packages also haven't exactly met expectations. While stock markets have recovered somewhat, the movements of the markets have varied greatly on a day-to-day basis. Additionally, the effects on cryptocurrencies and commodities such as precious metals, which have been named by various communities as safe haven assets, have in some cases strayed from expectations. Why might this have happened? And what's next? Yesterday, finance magnates sat down with Miko Matsumura, whose name is well known in the cryptocurrency industry, to talk through the crisis and what may lay ahead. Miko is the co-founder of the Evercoin cryptocurrency exchange and has helped to build multiple other companies. He is also a general partner of crypto asset fund Gumi Cryptos and a limited partner with Pantera Capital's ICO fund. Miko, great to see you again. Thank you so much for coming on the show.
Yeah, absolutely. Nice to be here.
Yeah, great. Okay, so I know who you are, but briefly, can you tell listeners who may not be familiar with you who you are and what you do?
Yeah, sure. So I've been in Silicon Valley maybe 30 years or so. I've been working on startup companies and mostly in the domain of open source software. So recently, about maybe I'd say a couple years back, I joined a venture capital fund called Gumi Cryptos Capital, and we're an early stage investor in this whole blockchain and cryptographic asset space. So, I'm an investor as well as a co-founder in a company called Evercoin, which has sort of a safer mobile wallet and exchange. So, working on a number of projects, really my passion is open source software and really how open source financial infrastructure is creating impact around the world.
Okay, thank you for that. And anyone who's listening, I really highly recommend that you check out some of Miko's work. Really fascinating stuff. But anyways, what a week this has been.
Yeah, it's pretty amazing what's going on out there, and obviously, it's difficult times for a lot of folks. So we have to be aware of that.
Absolutely. So I'm out here in Helsinki, just briefly, things really sort of hit the fan for us on Monday when the government started doing these mass shutdowns. And previous to that, nothing had really happened. But you're in California, is that correct? What are things like?
That's right. That's
Yeah.
right. 7 county lockdown in San Francisco Bay Area, including Santa Clara County, which is probably has the highest numbers.
Okay, gotcha. So let's talk about the crypto angle of all of the fallout and everything that's happened over, especially within the past week, but really over the past couple of months because of the coronavirus. So a lot of people in the Bitcoin community in particular really thought that Bitcoin and other cryptocurrencies would be sort of a safe haven, and that something like the coronavirus and all of the things that have happened as a result of the coronavirus would cause Bitcoin and perhaps other cryptocurrencies as well to rise. They're like, Bitcoin is a safe haven asset. This is going to prove it once and for all. That hasn't exactly been what's happened. So why do you think that that is?
Yeah, so what's happened recently, as we know that, when people think about this idea of sort of a store of value and they think about sort of a risk off asset, so they think about it as a decorrelated asset class, right? And the thing that's been really interesting actually is, first of all, to look at the price action around gold. So one
Mhm.
of the really odd things that people saw is they saw that in this magnitude of kind of decrease in things like the Dow and S&P and kind of broad market, what you really end up seeing is you end up seeing sort of an attempt to kind of pull back and essentially deal with, portfolios in a potentially defensive way. So the question is, what is it that we really saw? So, I think from the perspective of the numbers, what we saw is, Bitcoin price decreasing. So then the question becomes, what's the analysis that goes with that? So, Chainalysis did some very interesting numbers, and they basically said that if you look at the ranges of Bitcoin movement between sort of 10 and 100 Bitcoins and 100 and 1,000 Bitcoins, so really a broad range, you ended up seeing about 70% of the movement being from those groups, right? So really what happened is, I think, institutional. So the question becomes, if you're a portfolio manager in an institution, question becomes, what is the bucket in which you see the asset, right? And so is it a tech asset, right? So, so the thing that happened with respect to institutions is that it seems like the institutional investors maybe looked at this asset as something like internet, or they looked at it as technology, and they looked at it as part of their speculative portfolio. So, for example, if you look at my limited partner investors in the Gumi Cryptos Fund, we belong to their risk asset pool. So if you look at asset allocation, obviously they're putting risk capital into things like venture capital, right? They're putting risk capital into things like hedge funds, and that these are intentionally designed to be high risk, high reward investments, right? So that's so what we learned is we learned a little bit about the psychology of the institutional investor, right? But one of the interesting things is to study kind of the rest of the world, right? And so the thing that I think has yet to be proven is, what we proved is we proved that institutional investors kind of view this as a kind of a technology and a high risk, high return technology investment, right? So I think that's kind of one of the things that we learned, and I think that, we saw quotes from, I think it was Tyler Winklevoss, who said that this kind of shows how early we are in the Bitcoin world, because in a way, it means that the institutional investors maybe aren't reasoning about what it is properly. And the reason why I would say that they may not be reasoning about what it is properly is that, Bitcoin as, if you look at the fundamental properties of Bitcoin itself, the Bitcoin itself actually technically held up fine. So it did what it's supposed to do. I think obviously with the change in the price, there's certain mining operations that became unprofitable, and that kind of created some decrease. But the thing that's interesting about Bitcoin working as intended is that just enables the network to readjust its difficulty level, right? So it means that the network has sort of self-protected. And what it means is it means that, ever since we saw the slide, we actually are now seeing some kind of coming back. So what I wanted to kind of make sure everyone understood in this context is that, there are certain layers above Bitcoin that actually revealed some vulnerability. So for example, if you look at Kyle Samani's analysis at Multicoin Capital, he noticed that there were these silos, right? And the silos were really focused around exchanges. So for example, in an exchange like BitMEX, what we saw is like $700 million in leveraged, basically margin trading, essentially getting liquidated. So they got kind of blown up, right? And what that does is it creates kind of a local pricing phenomenon. And the thing that's interesting about it is there's an impedance mismatch between exchanges, because Bitcoin networks get congested. So the networks themselves don't move fast enough to enable arbitrage between networks. So you're not able in a kind of strong hit to be able to handle kind of global liquidity, right?
Okay.
But in a way, what's happened here is that what we have is we have kind of the strength of the underlying asset, which is sort of custody and settlement. And then we have a weakness in the sort of infrastructure above that, right? So we exposed some weakness in the exchange infrastructure. Particularly, there may be a need for kind of a faster inter-exchange protocol that enables kind of global price to be maintained, right? Instead of creating awkward local prices, right? Because what happens when you have awkward local prices is you end up having sort of more potential for instability, right? So you could almost view it as kind of an attack especially when you look at the weakness of something like a BitMEX, right? So we have traders on Twitter that are pretty well known that no longer consider trading on BitMEX to be safe, right? And the reason why is
Specifically
because
as
of
a
the
result of this. Sorry.
yes,
Yeah.
exactly,
Okay.
exactly. As a result of this, because what happens on BitMEX is that there's so much leverage on margin trading that when people's stacks get liquidated, it creates a locally lower point for Bitcoin price than the global price, right? And then that,
Mm-hmm.
but the problem is that inside of that bubble, if your assets are stuck inside of that bubble, you're unable to access the global price. You're only able to access the local price. So that creates more potential for panic selling and these kind of things. So if you look at things like the global stock markets, those are all entirely custodial, but they're all kind of electronic and they have kind of really strong synchronization of global price. The thing about kind of the other thing that you notice is you notice that global exchanges that we've recently seen are more shock resistant because they have circuit breakers, right?
Right, right, yeah.
The decentralized nature of Bitcoin, there aren't circuit breakers, and the only historical circuit breakers that have existed have been that volume in the early days of this asset would just crash the exchange, right? So if the exchanges experience too much load, they would just stop functioning entirely, which is sort of a form of an accidental circuit breaker. But to make a long story short, yes, we definitely saw some vulnerabilities. The other asset where we saw material amount of vulnerability was in the Ethereum network. We saw vulnerability in the DeFi protocols, right? So at the
Mm-hmm.
moment, one of the things that we were able to see is that Maker actually had a problem with an oracle that was supposed to be tracking the Ethereum price, and we ended up having sort of about $7 million worth. That obviously the price fluctuates a lot, so but of liquidations. And so because of the liquidations, people were 100% liquidated when they expected to be maybe 13% limit liquidated, and so this was really kind of a shock to that entire ecosystem, and the ecosystem is trying to respond. The reality is with 1 billion USD of smart contract locking of assets in DeFi, a $7 million liquidation is sort of uh, it's relatively not that big, but it
Right.
exposes kind of vulnerability, right? So that's one of the reasons why the ether price has kind of also suffered in this time, as well as kind of correlation across cryptographic assets.
Okay. So do you think that sort of all of these different pieces that you've described, the ways that crypto markets have reacted, is this more about the nature of crypto itself, or is this more about the nature of the crisis?
Yes, absolutely. So I think that to me, what you have to look at is both, but I would say that the current reaction exposes vulnerabilities not in the base asset, but
Mhm.
in kind of things on top. So in the case of DeFi, the things on top were actually the smart contracts and oracles, which have some vulnerability, right? And if you look at Bitcoin, the things that showed vulnerability were things like exchanges that kind of sit on top of the protocols, but that
Right.
the base layer protocols actually held up reasonably well. Obviously, when you think about a global exchange, the thing that we should think about is we should think about Bitcoin as settlement rather than as exchange, right? And so as settlement, we actually saw some slowness, right? Because it's complex because the infrastructure hasn't been tested under these types of circumstances
Mhm.
before. But to me, I think the big thing to observe is that the real test hasn't actually occurred. And what I mean by the real test is about to occur, right? Because what you're seeing now is you're seeing the, what Melton calls the money printing machines, right? So the money printing machines are going brr, that's the
Right. Yeah.
information that's going out there, that she's putting out there. And,
Mhm.
that really shows that there are huge kind of forms of economic stimulus, right? The US Congress is talking about $1 trillion package for stimulus. Obviously, the Federal Reserve has done kind of the overnight repo program, which is about $1.5 trillion of short-term liquidity. That's not money printing per se, but the reactivation of, I think it's on the order of $800 billion of QE, right? Which is,
Yeah.
and QE is, so-called quantitative easing, is really flooding the market with kind of, uh, sort of, I would call it fake paper money. So the thing that's really interesting when you couple that with other global players, like for example, you see what's happening in the European Union, very similar measures, right? And when you think about what's happening, that's also being put on the table are, maybe uh, if you take a look at the United States is proposing $1,000 check to every adult, 500 to every child, with the 330 million human population in the US. If you do the math, like, maybe it's only, you could round it down to maybe like 300 or less million, or how many adults, it's not even clear, but it's definitely
Right.
on the order of like, billions of dollars
Hmm.
being out, into the market. So really what's happening is that, we've already begun to see mild inflationary pressure, which has caused kind of a light rebound in things like gold,
Yeah,
right?
right.
So to me, the thing that's really interesting is that cryptocurrencies have just been recently kind of tracked as sort of a much more hyper volatile version of what happened to gold. So gold went down a little,
Hmm.
cryptocurrencies went down a lot, right? And then gold rebounded a little, and now cryptocurrencies are rebounding a lot, right?
Yeah.
So that's one way of looking at it. So if you look at the longer term hypothesis, if we do see, it seems proper that governments around the world are kind of like emptying their treasuries. But, I think that, the idea of hedging against that kind of inflationary pressure is really core to kind of what Satoshi Nakamoto proposed with the, mildly deflationary, asset. And I guess the reason why I say mildly deflationary is I want to be very cautious because, people actually know for a fact that Bitcoin right now is literally inflationary, right? It's literally inflationary because the miners are minting new coins, right? And what's
Right.
happening in May is kind of the Bitcoin halving, which is that the rate at which the network mints new coins is cut in half, right? But I think what's provable is that the number of coins that are sort of being lost in terms of lost wallet keys, etc. So if you think about Bitcoins in circulation, whereas there's some Bitcoins that have effectively been permanently taken out of circulation as a function
Hmm.
of things like lost private keys and things, right? So if you look at it as a whole, you could conjecture that it's probably approximates a deflationary asset, depending on the time frame that you're looking at it, right?
Okay.
So to me, it's certainly not hyperinflationary. So if you compare it to things like the Venezuelan bolivar, like what we've seen there is kind of record Bitcoin exchange over this time period, and you're certainly seeing records in high inflationary countries. So that could be an effect that we'll see down the road. Obviously, this is all like very forward looking and not investment advice.
Right, definitely not investment advice. And but yeah, I mean, it is certainly very interesting, to think about, especially with these money printing machines whizzing away, how that's going to affect the U.S. dollar and the economy and also monetary policy long term. I mean, do you
It's
see?
really,
Yeah.
yeah, it's extremely fascinating, right? Because one of the funny things that you see is you see that in kind of times of crisis that there's this so-called flight to quality, right? So,
Hmm.
flight to quality involves things like liquidation towards these kind of, risk off assets like US treasuries,
Right.
things like that. But it's such a strange phenomenon, right? Because I would say that the way that a small asset like a Bitcoin could be viewed is it could be viewed more as a hedging function against this kind of potential inflationary pressure,
Hmm.
and we'll see, right? Because, obviously, uh, the question, it's a very odd and unprecedented situation. So the question becomes like, how does deflationary pressure kind of match with inflationary pressure. And I think, the only one thing that I think we can safely guarantee is, volatility in the form of like the VIX index, is going to continue to be pretty high, right? We're going to see very high vol.
Yeah, probably for some time. And in terms of this flight to quality, there's analysts that are saying right now that the fact that, so many people are pulling out of the markets and into cash is the thing that's pumping the USD up. But do you think that, given all this quantitative easing that's happening, these federal rate cuts over the long term, is this going to have, a devaluationary, if that's a word, effect on the USD, or is it too soon to say?
So here's the weird scenario that we're in, right? Which is
Okay.
that the weird scenario that we're in is we're in a scenario where we're in an era which is essentially like modern monetary theory, right? So we're in an
Mm-hmm.
era where the era is really based on the belief of, in financial instruments, right? And so, obviously money's always been kind of backed by belief, right? And the
Mm-hmm.
thing that's really interesting, that kind of where the jury is out, right? Which is that ultimately, assets like the dollar are strong because people believe that they're strong, right? And the thing
Mm-hmm.
that I think is, where we're really kind of like in a period of unprecedented uncertainty is that, the question becomes, what will the reasons to believe in the strength of that asset be, as we go forward, right? Because if you look at what happened in the 1970s in the United States, Richard Nixon removed the bimetallic standard,
Mm-hmm.
and the removal, it's very strange. There's actually a period of partial removal where you could actually get silver certificates. So you could actually get like, so I used to have a $5 bill that said silver certificate on it, right?
Oh my God.
So
Okay.
during the period of partial removal, it meant that some bills could be redeemed and some bills could not, right? So
Whoa. Okay.
it was quite amazing, right? So it
Yeah.
means that if you go, so that $5 bill that I had that said silver certificate meant that I could actually go to Fort Knox and I could actually say, like, I would like my $5 worth of silver, and they would measure it out and give it to me, right? Like that's purely asset backed. And the concept of the bimetallic standard was obviously two metals, right? It was basically
Mm.
gold and silver. Those are the two metals, right? And when you looked at the circulating quantity of the silver certificates, it was matching the amount of silver in the reserve, right? So that's really the mindset that prevailed. But
Mhm.
ever since the decoupling of that underlying asset, now the dollar is based on kind of belief, right? So
Yeah.
it's very interesting, right? Because when you look at kind of global indices like the Dow Jones Industrial Average that kind of proxy the value of the economy as a whole, or if you just measure the total market capitalization of all publicly traded companies, you can start to kind of approximate this notion of what's the value of the economy and what is the price to earnings ratio of all publicly traded assets in aggregate, right? So you start to kind of look at equities and you start to think, well, equities have kind of a certain value, right? And that value should increase over time, right? So if you look at indices like the Dow, you start to see kind of over time, you just see it going up and up and up. And the question becomes like, well, if it's a proxy for the economy, is the economy worth more and more and more? And then in which case the question becomes, well, then does like do these monetary symbols like the dollar, the renminbi, the euro, like do they all kind of continue to maintain their value? Because people, a lot of people say inflation is good, right? And that inflation should be proportional to the growth and the value of the economy.
Mhm.
So I guess the way I would analyze all of this is that everything kind of comes all the way back to belief, right? And so the
Um,
question that we don't know is what we don't know. What hasn't been tested are those beliefs, right? I think at the moment people are like, well, yeah, of course, the dollar's the best money that there is. Some people think that. Other people don't think that. But like, question becomes, how will this play out? This big battle of beliefs.
yeah, exactly. No, I'll never forget when my seventh grade social studies teacher told me that money was based on faith in the United States government. Like that was such a sort of like a mind-blowing moment, but you're totally right. Like, I guess this is such an unprecedented situation that we just, have to take things day by day for now, and eventually just see what happens over the long term. And I'm looking forward to talking to you in the future, maybe a few months from now, to see sort of what's happening at that point.
Yeah, absolutely. I think, to me, the thing that I think is really, important is kind of trust but verify, right? So
Mhm.
to me, like the way that investors kind of mitigate risk factors is they perform hedging functions,
Yeah.
right? So, I think this is a very generalized statement, but, I would say that, were I to be giving investment advice, which I don't, I
Mhm.
think, the thing to try to formulate is to try to formulate, you know, what what it is that you believe in terms of like risk, right? And Peter Thiel in Zero to One describes investors as people who don't know what to do,
Mhm.
right? And the reason you can tell they don't know what to do is they diversify, right?
Uh-huh.
If they knew what to do, they would not diversify. They would just take like the one thing that was going to work and they would do that, right? So by
Mhm.
definition, an investor is someone who doesn't know what's going to happen and they don't know what to do, right? So because they don't know what to do, they need to kind of formulate a way of declaring what they believe that's kind of wishy-washy, and so that's what hedging is. So hedging is basically like, well, I really think this, but if I'm wrong, right? What if I'm wrong, right? And so then they kind of put, so they put
Mhm.
bets on things, assuming that they're wrong, right? So that's kind of the broad mindset that I think should inform people today, because I think the phrase "what if I'm wrong" is becoming more and more and more prevalent, right? Like the idea that we could be wrong about a lot of things it's becoming more and more clear that we were wrong, we have been wrong, like we're just provably wrong on so many things today. And so
Mhm.
increasingly people should be thinking about scenarios where the things that they think may not be the case, and they should maybe consider hedging on these different scenarios. So I think that's where my head's at.
Miko, thank you so much. It's such a pleasure to speak with you as always. Can you
Yeah,
tell the
likewise.
listeners, thank you, listeners, where they can find you? And also, do you have any announcements for any of your projects that you'd like to share?
Oh yeah, thank you so much. So easy to find me at miko.com, Miko.com. I tweet under Miko Java, Mikojava. And as far as things on my various projects, we continue to deploy capital out of Gumi Crypto's capital. So we're definitely looking at this as a continued opportunity to deploy risk capital. And then, with respect to Evercoin Exchange, if you're looking for a safe place to put cryptographic assets and trade, then, stop by evercoin.com.
Awesome.